And we are live.
Yeah, seems like we're live, man.
So, what a day, bro! What a week! What a day! Markets sideways. Even
Yeah,
though
it's a little bit as we expected. We've had a crazy rally, of course. So therefore, we kind of had the expectations. Okay, either we pull back or we chop around a little bit. So that's also how we positioned. So far so good. Uh, of course, it's been nice to see like this crazy bounce in like the long positions that I had, that you had, that we had. Um, but yeah, right now it's a little bit of a take a breather, see what's going on, and I suppose that's what we're doing.
yeah, it has been a tough one, especially for me. Like I have a big position in Oracle. Oracle had been pulling back after the IGV failed that breakout level. So now I'm reassessing the entire trade idea and the entire thesis. And given where we are in macro, there's a lot to discuss, but I am looking on a way how to record this, you know?
Do you think it's
So,
possible? If there's a setting to record the video?
no, there's maybe with OBS, I don't know. Do you still have OBS?
I don't know. Let's check. I don't know if I can. I haven't been in OBS for a while, man. So there is like a scene, but it's kind of cut off. Oh man, it's a little bit improvised here. It's the first time, so
It's,
I
I have
don't
to
think
figure out.
anybody's.
I'm gonna try to post the link in the chat so everyone finds the.
Let's check if this works. So let's see how far we can get here. Well, I could. I think I can record it. I just don't hear my own voice in the. Let's see. Say something.
Okay, let's try this recording.
Yeah, all right. I also have to check. Like I'm talking right now, and I'll have a look at the OBS recording to check out if it worked. But
Exactly.
give me 1 second. Man, now I have to find where I saved this.
It's a cycle, bro. It's always a cycle. We are cooked, we are back. We are cooked, we are back.
I mean, yeah. I have no idea where OBS saved my my file.
SPY is breaking 715 right now.
Oh man, let's see how the short went.
Yeah, but it's the gamma wall for this week, so we could pull back from there. Like just looking at the weekly option volume, there is nothing behind 715. So there's more option, there's more volume in the puts.
I can't find where it saves it. Aha, okay. Let me see. There we go. I found it. Let's check if it worked out. Yeah, I can record it with OBS.
Perfect. Then we can start
All right.
chatting.
Yeah, I started the recording right now.
Perfect.
So, okay, after a few minutes of preparation, we're live on the Substack right now, as well as having the OBS recording set up. It's gonna look a little bit different now because we're not on Zoom, but instead here in the Substack / recording it on OBS separately. But yeah, now we're back.
We are so back, bro.
Yeah, so we were
Markets.
already talking a little bit, but so far it's been nice to see the little rebound, like in our long equity positions. Of course, we're not like just broadly long the SPY, but we have our concentrated plays, and it's been nice to see like this insane recovery. I was just looking at it, and like these high beta stocks, it's super crazy. A few of them had like a 50% bounce, a 40% bounce. If you look at these like super speculative ones, like nuclear companies or these quantum computing stuff, or like I've also been seeing there's some action back in like rare earth metal companies. So these like high beta kind of really small cap shitty companies, they've been making a crazy rebound with the overall market, of course. So this has been nice to see, but yeah, as we've been laying out in the notes and so on that we put that are posted here on the Substack, yeah, we are kind of expecting a little bit of a breather, a little bit of a like consolidation or pullback in the markets. That's how we also positioned. So far, that's currently what's going on.
A good brief here, T. We are so back. Markets are back, bro. It feels like
yeah, markets are back to all-time highs.
Exactly, you said it perfectly. We are back. It's an insane rally, but we need to tackle it down and understand what took place and why we see this aggressive move to the upside that we are witnessing right now. If you remember last podcast, we talked about there is a risk for a tail event. But we also mentioned one thing. I had a question from a guy who he told me, I listened to your YouTube video and I was so bearish and I expected the market to crack down, and all of a sudden we skyrocketed. What happened? So basically we were hedged. Market were fully hedged. VIX at 30. There was no demand for hedging. And I said that we need a big catalyst for further escalation for market to crash down, like Liberation Day. So the day of the ceasefire, when Trump announced the ceasefire 1 hour before actually the deadline expires, we saw markets ripping. And it was basically at the beginning only algos that initiated this pump. There was no retail participation, no real money manager participation, no real traders participation. It was not organically, it was a synthetic move to the upside. And then for me, it was like, okay, I'm gonna stay cautious for 2 days, 3 days. If this move sticks, because I always apply the 3-day rule. If something sticks for 3 days and I start seeing real buying coming in from institutions, then I'm interested. Then the story flip is real. So we waited 3-4 days, we went sideways, and then we had these peace talks. They failed. There was no the negotiation failed. They didn't come up with a solution. And on Monday, if you remember, on that Monday we gapped down. For me, it was so necessary and so important to see if that gap down is going to get bought again. And it was the signal for me to flip into the long. After I saw people, organic buying getting into the market, it was for me, okay, now the story flipped. Now the market doesn't care anymore about the Iran war, time to go long. This is one side.
It feels like the market is over it. Like we had, it was, I was just thinking that like we this week or last week, whatever, we had the news that okay, the investigation into Powell was dropped and now everything is clean for Warsh to come in. And this in a regular environment, this would have been like the biggest news, the biggest like the biggest announcement or the biggest headline for the whole week. Because like yeah, of course, the Fed nomination and the process there uh, is like super super important for the market, but it kind of like went under the radar. Also like this hearing of Warsh, I watched it, and like of course there was not too much in it. Like there wasn't any new crazy information giving out by Warsh or like the senators who questioned him or whatever. But this would have been like the big story. But the market like was all focused on Iran. But now it feels like since Iran, nothing is resolved really. We have like a pause and like a little bit of time to chill out, but nothing is really resolved. But the market is kind of over it, and yeah.
Yeah, basically, this is what everyone is talking about. Nobody understands why the market is over it. The market is over it because of two things that aligns with each other. First one, the inflation print that we got, it was as expected, slightly below expectation. So inflation is not that bad as everyone was talking about, and market was pricing this in. Secondly, after that, we start seeing that the short-term interest rates market pulling back. Instead of pricing hikes, we're pricing in holds. And we talked about it. Once we start pricing in hikes, this will cause liquidity to contract, which will be very hard for further multiple expansion, which is why if we get multiple contraction, by nature, it's pure math, stock prices, equity price has to come down. So liquidity conditions improved because of that move in the short-term interest rates market. And the inflation came in below or at expectation. No surprise here. Everything was priced down, priced in, and the market had to reprice. The market was, oh, it's not that bad. So for equities to continue lower, we need bad news to get even worse. And now we are at this stage of, oh, it's not that bad. Yeah, we will figure it out.
Yeah.
Even though the strait is still closed, even though Iran is still controlling the Hormuz, and now the US is blockading the blockade.
Blockade the blockade, Don Zu.
Yeah, Don Zu. So this is why markets don't care and markets are ripping.
Yeah.
Especially risk. And if you look at it, this war will just increase the deficit. Increasing the deficit will increase GDP because there's the G part, which is government spending, which will then cause the dollar to trade lower, gold to trade higher, debasement rate is back on track, and increasing liquidity cause high beta names to fly. Look at ARK ETF. It has been also flying. QBTS, these all quantum names, all high beta names, everything is flying because liquidity is increasing. Plus, one thing I have been reading lately, there was an auction about high yield junk bond that came in about 16 billion, which was a record high. I forgot the article, I read it a couple of days ago on Bloomberg. So, bro, the credit cycle is back untapped. Liquidity is increasing. Vol is still high because of these. There's a structural bid in volatility. This is something also I wanted to talk about. If you look at it, since October last year, volatility has been very high for historical levels. And with high, I don't mean it's overpriced, but I mean it's higher based on levels. Like we used to trade at 14, 13, 15 VIX. Now we are trading at 20, 18, 17 VIX. And this is happening structurally. Fundamentally, it's caused because a lot of chaos across the world, because of geopolitical, for example, geopolitical chaos, but also this entire AI disruption narrative and the debasement rate, which is causing volatility itself, because the moment you start talking about the credit ratings of countries getting worse, now we are talking about the yield curve volatility automatically with it, because if a country is getting less worthy of trust with its credit rating, this means a lot for you as a bond investor, and this means a lot of you. It also means a lot for the economy itself, because a lot of growth that we have been seeing is caused by stimulus from the governments globally, for example, in Japan. So this is why I think we see some high vol. Now there's some mechanics to this I don't want to touch on right now because we are still in the early stages. But if you remember, we once talked about this back in the dot-com bubble. Tops were approached. As we trend up, we see also volatility levels increasing.
And then it's like at some points.
Exactly. And we are getting there. So
and you can also see it like from the market mechanics perspective. I remember back when silver had this crazy rally. At some points, we decided, all right, IV has gone so insane. The move has been so like crazy to the upsides that it was rising with the volatility. And then we started, okay, now it's time to look at the short. And therefore, yeah, then I remember we went short, and then like the next day or 2 days afterwards, silver was down 30% or something. Also, like you can see this everywhere in the markets. Like I think a lot of people have seen the story about Avis, the ticker CAR, that has rallied. Like it's a car rental company with negative equity. It's not looking good for them. They had this pension water fund or whatever buy like 25% of the shares outstanding. There's another fund that holds like 50%, so therefore it's already like a super low liquidity or like low float stock. And they engineered a short squeeze, but this short squeeze now absolutely like hammered because at some point from a market mechanics, like IV was at 300%. Like I think the short call, short put at the money paid you like 90% of the stock price or something, like absolutely insane.
What? Oh shit.
Yeah.
Shit.
It was like at I don't know 600, 700, and that's like short at the money call, short at the money put paid you like 600 something or so. So it was insane. And then and then you saw it like in 2-3 days, the stock absolutely got smashed. Like the longs or the squeeze, it was over, it popped. But it's a risky game to play. Like everything that goes up in such a straight line, it will always come back down. But the question is, how far will it go? And then if you get into the shorts, it could go up another 1,000% before it crashes down, and then you're already fucked. So
what's your opinion on SNDK, SanDisk? It's also vertical at this point.
Oh man, SanDisk, like I remember back, not that long back, but like a few months back or so, it was at 70, and I was already back then, man, this has rallied so much. Let me put a short on this. And luckily, I put like a risk-defined trade, no unlimited downside or whatever. And then, obviously the trade failed. I lost that like the premium. I don't remember if it was a short call spread or a bear put spread or something. But whatever, I lost a little bit. And then I always, like every few weeks, was looking back at the stock, and it just keeps going. Back then it was at 70. Now I just saw we hit 1,000. And it's this memory chips shortage story. But to be honest, fundamentally, I don't know too much about it. But man, it's crazy. This is not a short squeeze story. It's a real short squeeze in the real world in terms of like the demand versus supply in these memory.
There's a real shortage
in this memory chips commodity or whatever that they produce. But man, it's the question. Will it go to another 2,000? Like back when it was at 70, I thought, we have already rallied 200%. Let's go see this go back down to 50, maybe 40 or so. And now you could say, we have rallied 1,000% to $1,000. Will it go back down to 500 maybe, or will it rally to another 1,500 or 2,000 or something? So it's super tough. If you don't have an edge, no insider information, if you're not an engineer in this chip sector or whatever, if you don't know the specifics, you can't really play it. Like you can play it maybe on the volatility side if you have your edge there, if you see some extreme levels there, but yeah, it's a fundamentally driven story. So therefore, it's difficult to go in as an outsider and earn some alpha there. Yeah, so who knows?
This is also the problem with this is why I also picked global macro instead of being a niche investor or being specialized in one sector, because there's a lot of people doing research in that sector. If you pick one niche, you have to be very, very, very specific. You have almost every single time idiosyncratic risk that's taken place. So for me, I would prefer to take a thematic trade, take the ETF. For example, instead of picking SNDK, you could have picked the SMH, for example, and all of a sudden you are long the entire
Actually,
semiconductor play.
now there's I forgot the ticker, but for these memory chip stocks, there is a ticker. There's an ETF now.
ETF,
So
okay.
yeah, SanDisk SNDK is not. I'm not sure if it's in the SMH, because SMH is like the chip producers, semiconductors, and so
Exactly.
on. Man, I forgot memory or something. Like there's a memory stock ETF. But yeah, you could decide. All right, you can play it. But looking at it now, if there's like looking back, if there's a thematic ETF to some like hype story, that's typically bad for returns on these stocks, because usually when the hype is already so over or so everywhere that everybody's talking about it, and they're even putting like a memory stock or like a thematic ETF in this sector, then it's typically all right. Peak sentiment has reached because everybody's talking about it. They even make a whole ETF in this share. So maybe this could be a bearish contrarian signal actually. But yeah, for this sector, there like a few weeks ago or so, they put up this memory ETF.
Yeah, I found it. It's DRAM.
DRAM.
It's called DRAM.
Yeah, Roundhill Memory ETF. Yeah, exactly. Yeah, just straight up if you look at the monthly or the week. Yeah.
I don't know, man. I have no idea about these companies. I don't understand it. I will stay in my lane, boring trading with the FX and forward rates and yield curves.
I don't understand.
Trying to make sense. Yeah, I think also in the next couple months, it's gonna be very tough macro environment. There's gonna be a lot of noise, especially with Warsh, because you talked about Warsh. I think it's gonna be very noisy at the beginning until he establishes his own Fed, his own guidelines, and until the market get used to his policy.
Yeah, he talked a lot about change. Like, so a few things that he said in his Senate hearing. So firstly, what he said, he wants to do a whole like data program. He wants to change the data that the Fed looks at. He wants to change the way they look at inflation. He wants to change that they don't do forecasts, because to be honest, forecasts, nobody knows what's going to happen in 5 years or 2 years. You can forecast maybe 6 months or so, but like if you look at it, even the smartest of the smartest at the central banks, they don't know shit about the future about 5 years from now, or 2 years or 3 years. So he wants to change that they don't forecast as much. And like, yeah, talking about inflation, he said he wants to change that they don't look, core PCE, that's everything we look at, but that they change it like more like the persistent inflation component and more like specifics. So I think, yeah, this transition phase is going to be pretty difficult. It's going to be interesting to see what he will say during his first conference or his first press conference. He also talked that he will change the frequency that the Fed chairs or the Fed governors or whatever, the way that they don't talk every week, because like if you look at the headlines, you see it feels like every other day, except from the blackout period, that you see, Fed Waller has said this shit, or Fed whoever said this. So I think he wants to change that he wants to change the way that they do the press conferences. So it's going to be a lot of change, and therefore the market has to get adjusted to that.
Exactly. Here's the thing about the forecast. I hear a lot of hate about it, but I think most people get it wrong, because it's the most beautiful thing the Fed can ever give you. Even if they don't get it right, they are reducing volatility by doing this from the short-term interest rates market. So, for example, if the Fed stops its summer of economic projection, you will have no floor. It's already gonna be like, it's most of the time when you get the SCP, it's pinned to the SCP. The expectations is pinned to the
It's not gonna.
SCP.
Yeah, it might
Exactly.
deviate a little bit, but it's not gonna go crazy because
Exactly.
there's like a floor or whatever. Yeah.
Yeah. So for that reason, I think the SCP is very important because it reduces volatility from the short term of the curve, from the STR market, especially on the futures. And if you remove that, it's going to be a guessing game. Depending how he is going to be, depending on how he is going to communicate, because I think he said it multiple times. He's not a fan of forward guidance, but forward guidance was invented to reduce volatility and navigate market. So we will see. Maybe they will change the way their approach with the forward guidance. I could see that, but I don't think they will delete it completely. It's
yeah, like of course he maybe to appease Trump or whatever, he has to sound like radical. Oh, I will change everything. Oh, we will do it completely different than too late Powell or whatever. But yeah, in the end, he isn't stupid, so he won't say, "Oh, the Fed now changes everything, which will crash the market," because nobody knows what's going on. So
he worked with Scott Bessent for Soros and Druckenmiller, so trust me, that guy knows what he's doing.
Can't be that stupid.
Yeah, so he knows what he's doing, especially if he works with Bessent. If their communication is going to be well, these guys, they know what they are doing. They are not stupid.
Yeah, having the Fed and the Treasury work together to further the administration's goals, it's going to be interesting.
It's going to be interesting, but it's going to be tough because it's going to be a lot of noise, especially for individual investors like us, to figure it out ahead of time and figuring it out in real time to adjust positioning in real time.
And the problem is also it's going to be a guessing game. It's going to be a guessing game. Oh, what is their plan? Back then, you would just look. Back then it was like, oh, they have no plan. They just let the economy go how it goes and maybe do this and that. But now they have like some great plan or whatever. But you don't know. You can't know. And then at some point they come out with some crazy shit that nobody anticipated. And then you're sitting there in this position, like you said. Oh, I have to immediately adjust. I have to hedge the delta or whatever on the portfolio. See the beta to this market and whatnot. And yeah.
Here's also the what I think. I think the first 2 to 3 meetings for Warsh is going to be complete chaos. Maybe not chaos within pricing, like we wouldn't see markets swinging up and down maybe that big, but I think it's going to be a complete chaos with the interpretation of the language that he's using compared to the Powell Fed, because everyone's going to be talking about the Powell Fed, which is the consensus, which is where we are right now. We are starting at the Powell Fed. How is the Fed going to evolve with Warsh? Because he talked about a lot of things about changing the inflation measurement, as you mentioned, maybe changing the inflation target. Maybe he also big on balance sheet reduction. So we have to see how this is going to impact liquidity. I don't think he will crash down markets. I don't think he wants a negative liquidity effect because this will push risk assets lower.
Yeah,
and this is not good for Trump. Exactly. So we have to see. It's going to be a tough time. It's going to be very noisy. Again, it's going to be very noisy. It's not going to be an easy summer as everyone is expecting, I think. And here's also one thing I have been thinking about, the Iran situation. I think we could see further escalation here because it's not looking good.
Yeah.
And I know for now it's in the background, but once oil cracks back above 100, 120, 110, 120, 130, it's going to be back in the first place. And we are going to be back at Iran.
Yeah, I mean, yeah, crude is at 97, Brent is at 108. So yeah, it had thank God I took a hedge. I think it was April 17th, a Monday where the market, or I don't remember, but one day oil was
down 10%. It was a Friday. It
Or
was a
Friday, yeah.
Friday when Trump announced that they opened the Strait of Hormuz.
Yeah.
And then you text me, hey bro, I'm buying calls. And I was like, oh man, I don't know. It played out well for you, bro.
Thank God, yeah,
Played
yeah.
out well.
Now
Yeah.
I turned it into a spread, made it risk, actually risk positive. Like I can't lose on it anymore, but I can theoretically make like $10 or whatever on the spread. I took the B&O, which is the Brent ETF longs. But yeah, we shall see.
Beautiful. This is how you play it. Now the trade, like worst case scenario, you make money. Best case scenario, you make more money. And there's nothing to lose in that game. So
Yeah, I
beautiful.
take it, man. I take it.
This is how actually every single trade should be.
In the best
Unfortunately,
case scenario, yeah.
best case, unfortunately, it's not possible
Yeah, there's a few
because
ones I remember. I think we were also talking about it on a podcast back maybe a few months ago, where I took a long an Oklo stock in this nuclear company,
yeah,
small modular reactors, and I think that was one of the first trades where I structured it in a way like I bought my calls, let it run, and then sold my calls, turned it risk free or risk positive, whatever, and the trade worked out perfectly. But yeah, obviously it doesn't always work like that. Then we'd all be trillionaires by now.
exactly. Yo, okay, before we wrap it up, T, let's go through market sections and talk about cross assets and our opinion in short sentences. Let's start by equities. What do you think about S&P, Nasdaq,
Short
IWM,
term, short term,
short term?
like we said at the beginning, I see chop, like consolidation or a pullback. Maybe, yeah, bad news from Iran or whatever will cause a little pullback. I don't see a crash, but I see this overextension, like this 10-12% bounce that we had in just a straight lane up. I think that's too much. So I don't see further upside. So like we already expressed our view in a position in a short call spread on the SPY, just a short term one on the weekly. So yeah, I see consolidation, maybe a little bit of downside.
Yeah, I totally agree, especially on the gamma profile for this week. There's nothing above 715 on the volume or on the open interest. And there's a lot of open interest sitting at 700 and 695. So I think we could see some short-term pullback. I also wrote it in the note to early in the morning. Like this move that we saw last week in this chip, I think it's pulled forward for the Max 7 also earnings. So I believe if we get positive earnings from the Max 7, I don't think that we will get another 9 or 10% rally in the SMH in 1 week.
Yeah, like
So
yeah,
it's over. At this point, we could maybe chop, we could maybe see 2-3% on the SMH, for example. S&P could make another 1% or 0.5%. But on a fair
yeah.
value perspective,
If you look at SMH, like from the bottom, it's rallied 35% as an ETF, as a sector ETF.
it's
So
crazy.
yeah, madness.
Yeah. So based on our quantitative models, vol conditions are here. There is a slightly edge in selling vol, and we expect this spike to close the week at 720 in best case. Best case is gonna be 720. Okay, let's go now to gold. What do you think about gold? I'm a buyer at gold of gold.
Yeah, I agree.
I'm building a position.
I agree. So gold has, yeah, it's crazy. Gold has been acting as a risk on asset, not as a risk off or geopolitics hedge, which is like madness to say or to even see. But yeah, so therefore, I think gold has a little bit more stability because we can see the continuation of this debasement trade. So not maybe too much of a pullback. But I also wouldn't expect too much of a rally now in the short term.
It's pacing. It's consolidating here.
I would say buy the dips on gold. Yeah.
Exactly. So you mentioned the correlation that now gold is correlating positively with the S&P 500. So whenever we get risk on news, gold is usually rallying with it. But again, if you remember last week, we went on drinks, we talked about it. The market got the entire world is correlated with each other right now. There's only short-term correlations that breaks For example, we saw it once oil and equity traded in a negative correlation because of the war, but it's only short term. Everything, because of the leverage that we have in the system, is correlated positively somehow. And because of the debasement trade, which is going also to be positive equities because of the devaluation of the currency, I think as well start buying gold. If we dip back to 4,100, 4,000, I'm a big buyer.
Yeah,
Like
I agree. It's a long term, like you added for
I'm
your
gonna be a
long
big
term.
buyer.
Yeah,
Exactly.
this is also where like I think it's the 200 AMA sits around 4,200, maybe if a little bit lower in this area, 4,200, 4,100. So yeah.
Okay, let's move further. What do you think about bonds, where we are right now?
You're
Do you
asking
have
the
any
wrong guy,
opinion?
bro. Like what I can do, you look at the 10-year or whatever where it is. I can tell you if we go up to 4.4, 4.5, Trump will tackle the fuck out of the markets and will push yield lower. But that's all I can tell you. I can just give you the general consensus. I think you have to tell me something about it.
Yeah, for me, bonds is right now it's in a no-touch zone. I think we could have a trade in ZQ soon, but with soon I mean maybe after 1 or 2 meetings for Warsh, we could have a trade in ZQ. Till then, it's a no-touch zone for me. Like I'm not gonna short TLT here at while the 30-year is trading. Let me check. Where's the 30-year right now? 30 years, almost 5%. And if you zoom out on a weekly chart, on a monthly chart, it's looking like a triangle breakout that's going to take place, which is again caused by the debasement, increase in deficit. Debt is getting less worth, and bonds will get it.
Yeah.
So I have no short term. I have no opinion. Long term, I think we go higher on bonds.
Yeah,
We could see
I do agree.
we could see yields at 7% easily. Okay,
Yeah.
let's move to copper. What do you think about copper?
Oh, I'm bullish copper.
I know.
I have my longs in it. Let me check where we're at right now. Because copper has had a
Six,
really nice rally as well.
6.2, man, 6.028.
Yeah, we're at 6. So I mean, it trades similarly with the markets. Like we dipped when the market dipped. We rallied when the market rallied because, of course, it's like an industrial metal. But I'm more constructive on it. I think from a fundamental side, like there was a huge in the short term there was too much supply, but for the long term, for the forecast, it's by far not enough supply. So even though we had this short term like supply overhang, we still kind of rallied or held. So therefore, I think it's looking good for longer term.
Here's the reason why. Because it was only a temporary shock that was caused by the Iran war. Because going into the war, if you in our last report we mentioned this. We talked about the boom in the manufacturing sector, and we had a boom in the industrials. We saw it on XLI, XLB, has been XME performed very well, and that short-term shock caused also copper prices to trade lower with equities once we had the Iran shock. And then now, because the market's looking after it and saying, oh, okay, it doesn't matter anymore, copper is rallying back at it because when in the real economy, nothing has changed. For manufacturing, it's still the same. And we will see this on Friday once we get the ISM manufacturing PMIs, if the story is still the same or not. Okay, let's move further. What's your opinion on Bitcoin?
Bro, I remember we both, I don't even know if you posted on the Substack, but we opened a position in IBIT and like the cryptos, and I remember telling you, what do you think about taking along in these treasury companies in MSTR or whatever, because they are high beta as well as highly leveraged to Bitcoin. And I only saw with this, of course, like 10% bounce or whatever in IBIT. MSTR, for example, has rallied like 30%, which obviously, yeah, it's a crazy risk on move. High beta moves high, but to be honest, I can't tell you too much about it. I For me, it's in limbo. I have a long in it, but not too much, not crazy, not a huge position. So I couldn't care either way. If it goes up or it stays here, I make money. If it goes down, then it's all right.
Yeah, me too, man. I have a small position long. I'm short-term bullish because of these short-term liquidity conditions that has been improving. Today, I looked at my quantitative models. We see another pump in the liquidity index that we measure, that we track. So short term, I'm bullish, but I have a small size. If I lose, I don't care. If it goes up, I make money. If it goes down, I lose. It is what it is.
Yeah.
Okay, and the last thing, what's your opinion on the dollar?
Well, dollar, I think it's quite simple. Dollar, if we get Iran escalation, it's going to rally again. We're going to see markets flat or down, dollar up, because there is still no alternative as a safe haven. Even like looking at like gold hasn't acted as a safe haven, so therefore the dollar is going to be that. But yeah, long-term debasement continuation. I think as we already said it, I don't have too much to add, but maybe you have some interesting takes.
Yeah, exactly. For me, it's the same. Like we're still holding, by the way, the war lows on the dollar at 9,777. So it's still holding there. I don't know. For me, it's in a no-touch zone, and if I am gonna trade the dollar, if I have to be in the dollar, I will take it through a butterfly, and I have my butterfly back on with the AUD CAD dollar, if you remember. This is the only way I'm going to play it via relative value rotations, and I need to engineer my own convexity, but taking a direct bet, it's tough. Like to be honest, I also have my entire portfolio in euros. I manufacture my own dollars with the option market. So I have no opinion right now.
Yeah.
It's gonna be very interesting for the next couple months since we have been consolidating. I have been very bullish on it since the beginning of the war because I thought we could see a breakout finally in the dollar above the 102 level, especially that the everyone needs dollar now to buy oil. You are buying oil from the United States. Like you shifted the entire oil, global oil supply chain toward the United States. Everyone is going to be buying it from them. This is Trump's plan, basically. And I expected dollar to rip even higher, and we felt the breakout. So now at this point, I'm sitting back, watching it. Depending on the next macro theme that will persist longer, I will trade it. With that said, this is all that we have.
I mean, there's still the big one left, oil, but who the fuck knows?
For oil, it's going to be very straightforward. You buy the dips at 85, 80, and
Yeah,
you sell the rips toward 100.
yeah.
Because I don't think Trump wants it to escalate further. And I don't think we're going to trade lower because of the structural risk premium that is now in, because Iran has also some control. And I wrote about it in the Substack, in the chats multiple times. There is a shift that took place. And again, the US is going to profit from it because they are a net energy exporter. All these shale companies going to profit from it. And I think XLE is going to be further along here for me. I'm buying the dip I was waiting for 55 and 50 to buy dips there if we trade lower. But I think for the next 5-6 years, XLE is going to be a good buy.
But to be honest, what has been interesting, so Trump has been trying to push the shale producers and whatnot, increase production. But if I remembered correctly, or if I saw it correctly, the rig count has actually decreased. Like I think it was in the Permian Basin or whatever. So what's going on?
Bro, for the rig counts, nobody cares. Basically, because it's a lagging indicators, it takes time.
Yeah, of course.
For rig count, if you look at it, it lags around 3 months. You know, you are like, let's say 6 to 12 weeks behind if you only look at the rig counts. So it has been decreasing, which was like I was noticing it going into this year. This is when I was also bullish on oil, but it's gonna continue decreasing. At some point, it's gonna start increasing, and then oil is already topped, and we are trading lower. So you can't look at it as a leading indicator. It's a lagging indicator.
Yeah. Okay.
Yeah, maybe we'll see increase in rig counts going further because they will increase production, especially these firms. I think we will start seeing more commercial shorting, commercial bearish positioning getting into the market as they hedge their price at these levels.
Yeah.
But man, the earnings season just started now for Q1, and these companies are going to be very, very interesting.
Yeah,
Like
man.
yeah,
go ahead.
Like XOM, Oxy, SLB. If the earnings call is gonna be very interesting because we know the number is gonna be look good, but the forward guidance is gonna be even more interesting. If they project higher growth, we will see another leg up in energy.
I remember there was a headline, I think it was maybe the BP CEO or something, who said, we expect our numbers to be exceptionally well or something like that. So I think, yeah, everybody's already expecting it's going to be super good, of course, because look at these prices. But yeah, it's going to be, as you said, important to see what they guide, what they plan.
Exactly.
Absolutely.
And then the analyst estimates going to be also interesting, what the street is thinking. And if we're going to see upgrades or downgrades on these companies, I think it's also going to be interesting. So I remain bullish XLE. I got out of the position. I wrote it in the last report. We took it out of our portfolios. I'm looking to enter this market. I'm looking to be a price taker, which means I will be waiting for price to get to me, instead of a chaser here at this level.
Oh yeah.
Yeah, that's it. It was a quick one.
A quick one. We're here 45 minutes or so.
Yeah.
All right. Yeah. I suppose exactly. With that being said, we'll see each other at the next one, and keep following the Substack.
Exactly, man. T said it. Keep following the Substack, folks.
All right. Bye. All right. Yeah. Finished.
Yeah.
Finished.
Okay. I will finish the live here, and then we can talk privately if you want.
Sounds good.